final month of the year is upon us, and it's a 3-week sprint down the home stretch of 2025 for financial markets as year end starts to loom quite large on the horizon. Actually, it's not a sprint, it's more of a stumble as the new trading month gets underway in a decidedly risk-off manner. Equity futures lower pretty much across the board, certainly in both Europe and the United States this morning. There doesn't seem to be a particularly obvious catalyst for that, although we have had a few notable developments through Asia trade. The crypto sector has, really fallen off a cliff, to be completely honest with you. And my good friend and boss, Chris Weston, has an interesting video on that on the channel. Plus, we've had some hawkish comments from Bank of Japan Governor Ueda overnight, who was talking about how they will be considering the pros and the cons of a rate hike at the December meeting in about 3 weeks' time, which has seen money markets move to now discount about an 80% chance of a BOJ rate hike at that final meeting of the year. In addition to that, I think we're also just seeing a little bit of profit taking after Thanksgiving. Of course, we had that big CME outage on Friday, which meant that the last 2 days of last week were essentially a write-off, but it was nonetheless the best week since May for both the S&P 500 and the Nasdaq 100. And I think as we move into the end of the year, we are likely to see profits being taken off the table sooner rather than later as participants seek to lock in gains before closing up their desks and putting their feet up over the festive period. As for the fresh trading week, well, it must be said that catalysts are somewhat light and thin on the ground. Of course, we would ordinarily be getting jobs data out of the States on Friday. That has been delayed until the 16th of December owing to the government shutdown. As a result of that, all we've really got to get our teeth into this week are the latest round of PMI surveys from pretty much every major economy, plus the latest Eurozone CPI figures, and we will be getting the November ADP employment report out of the States as well, which may play a role in shaping expectations for that December FOMC meeting. But I think fundamentally, I remain in dip buying mode, certainly in terms of the equity space, although it must be said we are seeing some risk aversion this morning, as I alluded to, and some demand for havens as well, with gold building on the gains we saw last week. And actually, gold is looking like it could mount an ascent at those record highs at $4,400 an ounce that we printed earlier in the year. Things are certainly starting to look up a little bit more for bullion as well. But I think fundamentally it's going to be a week where participants are really monitoring those incoming data releases that I alluded to, but really looking ahead now to that next FOMC meeting, which comes on the 10th of December. We are pretty much pricing that as a certainty for a rate cut now. It would be very, very surprising if the Fed didn't deliver on those market expectations. But the key will be, what's the Fed's guidance? What are they looking to do in 2026? And I think that's the next big event that could shape sentiment in a more durable manner through the month of December.